Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had 2 directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Checking in on YELP, GWPH, PCLN, NVDA, and TSLA. Looks like I misspelled it here. So starting with YELP, we have the dump after earnings and the bounce attempt. It was nothing but weakness, and these upper wicks show us that. It shows profit taking, it shows the inability of the bulls to close with any conviction, and it ended up being a bear flag with continuation to the downside. So here we are at the 200-day moving average support of 34.72, and that's also the must-hold weekly support just below it at 34.62 to maintain the higher low pattern. The low of today and the low of this week, 34.61, so holding that level, losing it by a penny, that's enough wiggle room. I always give a few pennies of wiggle room, and we're watching tomorrow if the bulls can hold 34.61. It's a potential bottom fishing play where you make an entry and put your stop loss just below that level. Very low risk in terms of capital, high risk of getting stopped out, but obviously you're not risking much money if your stop loss is in place properly. So watching to see if the bulls can rally and hold this 200-day moving average support after seeing a bear flag and continuation to the downside certainly need to show up to end this week. GWPH is confirming the bearish reversal doji with a red day today, breaking the higher low pattern, and we're looking at support of 128.71 and then 126.75 in order for the bulls to stay very strong, but we can really pull back significantly and still be holding all moving average supports down here and the higher low pattern as long as it's above 112, which should be very easy for the bulls to pull off. Weekly time frame is rejecting from the upper Bollinger Band resistance this week, and it is a bearish inverted hammer showing that profit taking. So we might be headed back down to the middle Bollinger Band support, which is right around 120, as these Bollinger Bands are very tight and they're going to have to ascend to the upside to create more upside room for the bulls to head back up to the next resistance of 134.63. PCLN new all-time high with the strength in the S&P 500 right out of the open, but then weakness came into the S&P 500, and we saw that in PCLN with a bearish candlestick, an upper wick of profit taking, and I do like the potential of a bearish entry here if we see continued consolidation in the S&P 500. And a break of 1642 will be signal number 1 for the bears. And if we break 1628, we will see some nice downside. And that break doesn't have to happen tomorrow. That can happen early next week. And then we'll be looking at the middle Bollinger Band as our next support. But after this weak candlestick, if the market consolidates, we're seeing a pretty strong correlation between PCLN and the S&P 500. So if the market consolidates, we're going to be looking to potentially break 1628 and see further downside. The weekly time frame is a bearish reversal doji. We are holding the upper Bollinger Band of support on the back test, 1644, but that indecision after a bullish 6 weeks in a row does favor the bears short term. NVDA, not trusting the bulls here. That's a very weak bounce attempt, very weak volume, and we ended up seeing a new low on this pullback. We did hold the 50-day moving average support of 105.95, but I'm going to be eyeing NVDA on more of a midterm bearish stance here at this point. Now, we're obviously bullish overall, and the bullish uptrend is nowhere near in risk here, but we're confirming the bearish reversal candlestick from last week. Look at the high bear volume. Look at the bearish MACD cross. We're on the verge of the 8 period and the 4 period crossing the 8 period to the downside, exponential moving averages, and we're close to closing. If we close below 107.10 this week, we're going to lose the 8 period exponential support for the first time in a year. That is definitely significant because we have bounced off of it 6 times on the way up. So losing this level will have us looking down at 99.12 as the recent higher low before we continue to the upside. So very key positioning here for NVDA. Could be in for some midterm pullback. Last, we've got Tesla, also very interesting here as well. And at first it started as normal, healthy consolidation. The red flag for the bulls is the spike in bear volume. That's high bear volume, and we closed at the low of the day. We got a gap to fill at 263.36. We've got the middle Bollinger Band daily, going to be right at that level tomorrow as well. And we are looking for further pullback. What stands out to me on Tesla on the weekly time frame, I need to zoom out to the 3-year chart, but it is a triple rejection from 280. You put your cursor right on 280. You can see at the all-time highs, 2 weeks rejected from 280, unable to close above it. We closed right on it on the another attempt, and a couple rejections there. And here's another rejection with a very, very clear bearish reversal inverted hammer with a huge upper wick of profit taking. This indicates that it is very likely that we see further pullback next week, and a red week next week will confirm that further consolidation is coming. So on any market weakness, Tesla is one of the top names to be watching, in my opinion. Also watching Netflix and a couple other names, but Tesla is among the leaders with that 280 resistance and that reversal candlestick. So couple short-term bearish plays in NVDA and Tesla. We know it's not going to do anything to break the longer-term uptrend that both of these names are certainly enjoying. And that's that. Thanks for watching. See you tomorrow.